Past 18 months have seen an explosion in people investing in brokerage CDs. What's a brokerage CD? How does it differ from a CD at the bank? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Okay, the past 18 months has seen an explosion of people investing in CDs, but not at their local bank. Why? Because oftentimes the local bank CD rates are below market. And I'm not bashing local banks. They have a very, important purpose. As more and more stuff is done online, sometimes people just need the convenience, or they've been working with that bank for a long time. But oftentimes the local bank will offer CDs that are well below the normal interest rate that you should get. And as we've seen this incredible rise and kind of plateau of interest rates, one of the necessary things in your finances, a task, a responsibility that you haven't had to worry about for 15 years is make sure you're earning the right amount on your cash. The cash dollars are not lazy dollars. They're there not to make you rich, but to keep you from going poor. But you want to make sure that you're getting a competitive, a strong interest rate. At the local bank, they will have, a 6-month CD, a 1-year CD, 18-month, 2-year, and so on. And oftentimes those rates, right now, those rates should be above 5% or around 5%. And oftentimes you'll look and they might be at 2, at 1.5, at 2.5%. And you might say, why would anyone do that? Well, out of convenience maybe of working with the local bank, but yeah, I would argue no one should. And so won't the bank lose a lot of business? Well, they'll typically offer a CD special, a 10-month CD that's at a competitive rate, or a unique CD. And the thought behind this, and I'm not going to go too far down this rabbit trail, is I would say we're still not out of the woods with this regional banking crisis. Did also just have another bank take over because they were on the brink. And so the issue is banks have taken deposits or money, and they've got to put that money to work. They've got to earn interest on that money, so then they can pay you interest, or the depositor interest, and cover all their expenses and so on. Well, they haven't. They took a lot of those resources and invested them in tools that were only paying 2-3%. And now that they've got to pay their depositors, their customers, a lot more than that, they can't afford to do it. And so they're just not paying their depositors, their customers, much more than that, and only trying to do so in a very kind of limited instance. And what's that meant? It has meant people have looked outside their local bank, outside the bricks and mortar bank, to say, well, maybe I don't want to invest this money, or maybe the purpose isn't long-term, it's still short-term, so I need to have it in a safe, steady investment, but I need to get a better interest rate. What are my options? Well, one of those options has been a brokerage CD, Still a CD, certificate of deposit, but different than similar, but different than what you can get at the local bank. Going to link an article below in the description that you can check out, but let's first hit the similarities. First, the similarities between a normal bank CD that you'll get at the bank and a brokerage CD. Number one, they are both issued by banks. Okay, they're both issued by banks. In fact, let's say, for example, JP Morgan Chase can issue a CD that you can get. If you're a customer, you can walk into JP Morgan Chase, you can get a CD. But you could also likely find a JP Morgan Chase CD in a brokerage account. And so they're going to offer CDs possibly in both places, possibly at different interest rates. So one similarity is it's banks issuing them. Okay, that's one. A second similarity is that it's still FDIC insured, which is, I would argue, one of the most important features, right? You need your CD dollars to be FDIC insured. You don't want to blow through those limits. You want to be aware of that. So that's the same, whether you're buying a CD at the bank or whether you're buying a CD in a brokerage CD. And then finally, another similarity is it's going to pay a fixed interest rate. And you've got to be aware of those terms, right? There could be some differences, but for the most part, it's going to pay a fixed interest rate. All right. So if you see a CD that's paying 4% at your local bank, and you find one that's paying 5% at on a brokerage CD paying 5%, that's the fixed interest rate. So those are the similarities. What are the differences? Well, the primary difference is where you're going to buy or invest in that CD. Obviously, the CD at the bank, you're going to go to the bank, open up an account there, and invest in that CD. A brokerage CD, you're going to buy inside of a brokerage account. So an individual account at Fidelity, you can buy a brokerage CD in there, or Schwab, or I'm not sure if Vanguard has them, I'm assuming they do. Within your IRA, within your Roth IRA, those are held at a brokerage or investment company, and that's where you'd be buying brokerage CDs within. So that's the number one difference, is where you're going to be buying the CD. A brokerage CD is one purchased at an investment company held within your investment account. Second, they will typically pay a little bit higher interest rate, okay, because they are competing nationally. So it's a much broader market, and you can actually see, at least when we're doing this for our clients, we run the list and okay, here's all the 1-year CDs, and you can see all the interest rates. And so therefore, because of that market, you're likely going to get a more competitive interest rate, a stronger interest rate, but there also might be some fees for holding that CD that you might not see at your local bank. Two more differences, and these are the biggies, guys. These are the biggies. When you buy a CD at the bank, say it's a 1-year CD and you get a statement 1 month later, what's the value of that CD? It's the same. It didn't move. If you put 25 grand in the CD, you get your first monthly statement, it's going to say the value is 25 grand. If you get a CD in a brokerage account, if you buy a brokerage CD and you look at your statement, that value might change. When it matures, so if it's a 1-year CD, and you put 25 grand in there, it will still mature at 25 grand. But along the way, each month, that value on your statement could change a little bit depending on what's happening in the market with interest rates. And therefore, this leads to another change. Well, what if I wanted to get out of this CD before maturity? Well, a brokerage CD you could sell in the open market, assuming there's a buyer. Well, what would you sell it at? Well, whatever the value is. And therefore, if you bought a CD, a brokerage CD that's paying 5%, and globally or nationally, interest rates have dropped to 4%, your 5% CD is more valuable. It's better because you locked one in at 5 when now the prevailing rate is 4, and therefore if you wanted to sell that or get out of that CD before it matures, you could likely sell it a little bit higher, right? The converse is true. If you bought a 5% CD and interest rates go to 6, now your 5% CD isn't as valuable, and you might see that value go down on your statement. Maybe not a lot unless you're holding a longer term CD, but that value is going to change. This shouldn't worry you, because if you're holding the CD to maturity, it's still going to pay out and mature at the same value. You know, whatever, if you put 25 in, it's going to mature at 25 grand. But this can create a lot of concern for people investing in brokerage CDs, because this is supposed to be stable money, and they look at their statement and they see that it's fluctuated. Don't worry about that. As long as you hold it to maturity, that's just noise. And then the other big difference between brokerage CDs and CDs at the bank is when they pay interest. And that matters because of potentially compound interest. And I would say most CDs at a bank are going to pay monthly interest. And what that means is that monthly interest can get added to the principal or can go into another account, and you can then earn interest on that interest. Most brokerage CDs pay simple interest, which means there is no compounding, and often they pay that interest out just once a year. And therefore, if it's 5% on 50 grand, you're going to get $2,500. That's going to be the interest that you earn, versus 5% on 25 grand in an actual bank CD. You could earn more than that 2,500, 5% on 50 grand could earn more than that 2,500, because you're getting interest on interest, right? And so be aware of that difference as well. So which one's best for you? I would argue you want to make sure that you're getting the most competitive interest rate. You want to make sure that this decision is simple and it fits within your financial life. So work with your CFP, see what's best for you, and make sure that you're getting the proper return and rate on your cash. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well. or send us an email, info@korhorn.com. All right, there you have it. Go on and take your next wise step in your financial life.